Do you know that the Federal Reserve Bank of United States is a private entity? Do you also know that the Reserve Bank of India, that was established in 1935, was a private entity until it was nationalized in 1949? Now, of course, it is fully controlled, but sometimes the RBI governors, with the permission of the then finance minister, will claim that we are independent. So these things are all interesting data points. I just wanted to get back to Federal Reserve. What is its mandate and what is it doing now? And is it time for the Fed to go? You don't need a Fed, perhaps not. So what happened? Why was the Fed established? How were things before that? All that and more in this, and a quick slide deck to share all the different things that happened. Please like this video. If you have not already subscribed to our channel, do subscribe to our channel. Here we go. Who was Parshurama, who led a life of devotion, dedication and daring? Why did he take birth on the earth? Was it to eradicate corrupt Kshatriya rulers who had become tyrannical and oppressive, or was it to bestow daya for the needy? Well, before we talk about the Fed, we should talk about two families, the Rockefellers and the Rothschilds. We all know the Rothschilds are perhaps the most influential family in the whole world, but Rockefellers are not far behind. We're going to take a look at these two also briefly, because I have done Rothschild family history in a previous monologue, but not Rockefeller. This will be the first time we'll be looking at the Rockefeller family also. Let's go. So what happened was, before the Federal Reserve came along, that was in 1913, how were things in the United States? Well, there were 25 chartered banks, and they all maintained different interest rates depending upon the needs of the local area. And banks were truly serving the needs of the local people. There was no centralization. So the fact that you got one interest rate here and a different interest rate in a state farther away did not make much of a difference. But 1907 banking crisis changed all that. And why did that banking crisis happen in 1907? Well, one of the main reasons was the massive earthquake that took place in 1906 in San Francisco. That was the first one, and then a lot of other things happened. 5 main factors were blamed for what happened in the 1907 banking crisis. The 5 factors are the usual stuff: economic conditions, weaknesses in the financial system, bank runs and a loss of confidence. Then somebody tried to corner a company called United Copper. That was another factor, and a lot of speculative investments. All these caused a run on banks and major mayhem, and in 1913 the Fed was established. So that was the Federal Reserve. 12 different districts, there is a Bank of Governors, and there is the Federal Open Market Committee. These are the 3 wings that a federal system got established. Now let's get back to how things were before all these things came along. By the late 19th century, European banking houses led by the Rothschild family dominated international finance through gold reserves and sovereign lending. Remember, I told you how Rothschilds used to support both sides of a war, and regardless of who lost and who won, these people made money. The Napoleon story, where Rothschild had prior information, but he deliberately spread a false news among Great Britain, and then once the news came that Britain had indeed won, this guy first bought up things on the cheap using the false news and then sold them at a profit once the reality came out. So these were all some of the things that Rothschilds used to make money. On the other hand, let's take a look at John D. Rockefeller. John D. Rockefeller's father was, they would call like, snake oil salesman, to say better something, for a lack of a better expression. He used to travel frequently. He was bigamous, meaning like he had 2 marriages, and he was frequently not home. But his mother was a very prudent, responsible person. She raised the family of 6 children all by herself, and one of the children, I think, is from the other wife of John Rockefeller's father. Anyway, that's all. Those days, those things were not uncommon. Let's get to the facts. What happened was, I think when he was 20 or 21, John D. Rockefeller went into business with 2 other individuals, and Clark and one other person, Gardner if I remember correctly, and they all had to pool in $4,000 to start what is called as commission business. In commission business, they were splitting the investment as 50-50. John D. Rockefeller by that time had already started working. He had some money in his pocket, close to $800 to $1,000. He borrowed another $1,000 from his father, Bill, and for 10% interest, and put in the money to start this commission agency company. At that point of time, a lot of commodities were moving, and they were based out of Cleveland, Ohio, and this was the place where many of these things came together. Perhaps they would either go to eastwards to New York, or they would go northwards to Chicago into the Great Lakes, and then they would get shipped out to various countries. You could, from Chicago, ship out all the granaries all the way to the Atlantic Ocean. Then they had figured out a way. They joined lakes, they cut through different rivers, deepened some places. It's a massive industrial undertaking that United States did so that they could use the water to send commodities out. Great idea. That was one of the reasons why the US grew so quickly. Anyway, so Rockefeller starts this commission company, and then oil was found in Pennsylvania. And then suddenly he shifted his attention to starting to work on oil, and he slowly started getting into that, and the company grew. By 1913, Rockefeller was the richest American, and he owned close to 3% of the gross domestic product of the United States at that time. Of course, the GDP was not there as a number, but you can back calculate it. Basically, you can see how much the nation was worth and how much he was worth, and he was worth about 3% of the national product. US was growing very, very fast at that point of time. Now, let's get back a little bit. So 1913, he had become extremely rich. Standard Oil was a very big company, and in 1911 or so, they broke it up into smaller parts because he did some trick. There were some laws in New Jersey that allowed hanky-panky stuff, or what I would call as mergers and acquisition stuff, a little bit more easier than other states, and he took advantage of that, and he established Standard Oil in New Jersey. But in 1911, Standard Oil was broken up as ExxonMobil, Chevron, all the companies now which are making money hand over fist in today's climate. So these are all very rich companies. So the Rockefeller family, when the thing was broken up, he had interest in every one of these families. He had stocks in every one of these new companies like Exxon and Chevron and so on and so forth. So they were incredibly wealthy. So Rothschilds on one side, Rockefellers on the other side. And alongside this, there was JP Morgan's Chase Bank that was also becoming very, very popular. So these two dynasties, Rothschilds in Europe and Rockefellers in America, formed a transatlantic alliance linking industrial wealth with global banking capital. See, not much is written about this. In fact, if you go and search on Google, when did the two partner, you will see an agreement in 2012 where the Rockefellers, 2012, 13 years ago, where Rockefeller is assigning Rothschild Company as some financial advising firm or something of that nature. But these two had connects from way back, and look at all the references, you will know the answers to all your questions. Okay, they represented the two R's, the old world gold financiers and the new world industrial magnates, creating a combined front in international monetary control. Now, we talked about the 1907 panic. It was a manufactured crisis, but using that as a pretext, many of these people called for reforms. So in 1907, as the crisis deepened, people were saying, oh my goodness, how is it that there are so many? Remember, there were 25 chartered banks. How come these banks are failing left, right, and center? Oh, one important thing I forgot to mention. The banks were mostly situated in the East Coast, and the earthquake happened on the West Coast. And as part of the insurances, because all the companies and people who were having establishments in San Francisco, they had insurance coverage. So in order to pay the insurances, the insurance companies went back to their banks in the East Coast, and the banks didn't have enough money. They literally didn't have enough money to pay the insurance costs for the rebuilding of San Francisco, because this was a huge city at that point of time. So all these things, one thing after the other, added up, like I said, 5 reasons. They said, okay, there is a crying need for a central a lender of last resort, and that's how the Federal Reserve concept was born. Of course, the leading banker of that time, JP Morgan, he aligned with Rothschild and Rockefeller interests, stepped in to rescue the system, showing how private financiers could control national stability. So this is what you saw outside. But in 1910, there was an island called Jekyll Island, and there was a secret meeting. In that secret meeting, there were several interests represented, and of course, the interests of Rockefeller and Rothschild were represented. By the time you start seeing some of the names, you're going to be in shock. November 1910, a secret meeting was held on Jekyll Island, Georgia, and this was attended by one Senator, Nelson Aldrich, chairman of the National Monetary Commission. Chairman of the National Monetary Commission. And remember this name, Aldrich. Aldrich's secretary, Arthur Shelton. National Citibank president, Frank Vanderlip, affiliated with Rockefeller interests. Paul Warburg of 𝗏𝗘𝗙𝗘𝗥𝗘𝗡𝗥, representing Rothschild's interests. Representatives of JP Morgan, Henry P. Davison and Charles B. Norton, and an economist, A. Piatt Andrew. So you had Rockefeller interests represented by a Citibank, you had Rothschild interests by one other person, and then there were two people representing JP Morgan. There was an economist, and then of course Aldrich and Aldrich's secretary. You can say two of those. I'm deliberately keeping Aldrich separate because you will understand why I'm doing that in the next slide or the one after that. So this was a secret meeting. What or who is Nelson Aldrich? Nelson Aldrich, a US senator who led the commission that recommended creating the central bank after the panic of 1907, was the father-in-law of John D. Rockefeller Jr. Now go back to the previous slide. Now, how many people were representing John Rockefeller? 3, right? Rothschild 1 and JP Morgan 2, and there was an economist. So these guys had the majority. So whatever they wanted happened. Plus, Aldrich was the chairman of that commission. The Aldrich plan emerged, essentially a blueprint for a central private banking cartel disguised as reform. The Jekyll Island Club was chosen for secrecy and its exclusivity. It was owned by America's richest families. The participants used code names to hide identities, fearing public backlash against a Wall Street takeover of the currency system. So this was 1910. In 1913, the Federal Reserve Act is passed. The Aldrich Plan of 1911 proposed a National Reserve Association, a privately run institution controlling currency and reserves. Public resistance labeled it as a banker's bill, so it was rebranded as Federal Reserve Act to appease as a government reform. So just the name change, nothing else changed. It was completely under control of the Rockefellers. President Woodrow Wilson, advised by Aldrich and Warburg allies, signed it into law on December 23, 1913. So the Federal Reserve Act was signed in 1913 and the 12 federal districts were established. The act gave private banks majority control over Federal Reserve governance. The Board of Governors would be appointed by the President, but the Federal Advisory Council, chosen by the banks themselves, held real influence. See, in the formation, it only talks about 3 entities, okay? 12 federal districts, Board of Governors, and FOMC, Federal Open Market Committee. Where is the Federal Advisory Council? Does it sound like National Advisory Council that was headed by Sonia Gandhi? You get it. So all the real power is hidden in places like this, names like this. Advisory Council usually is a very, very powerful name. Anytime you come across something like that, it means that is the council that takes the decisions. My 2 cents, okay? Now, this act was designed to conceal Wall Street's control over the financing concepts of America and by extension of the world, because America was on the upswing. Of course, Germany was on the upswing, but in 1914, when the war happened, Germany lost big, and then Germany was done. But not only that, even France and Great Britain, the two other empires, they also started weakening after the First World War. That's a different story for a different day. Let's get back to the Federal Act. So even though they were supposed to be decentralized with 12 federal districts, the power quickly consolidated in New York. The New York Federal Reserve Bank, tied to Wall Street institutions like J.P. Morgan and Chase and so on and so forth. The New York Federal Reserve Bank, tied to Wall Street institutions like J.P. Morgan, became the de facto command center. Congressmen from rural America were misled to believe that it would protect farmers and small businesses when in fact it was centralizing money control in New York. Southern and Western legislators were persuaded by promises of regional autonomy which never materialized. So, the transfer of power was happening $1 at a time. We can think of it that way. The Federal Reserve was granted the exclusive power to create US currency, a power that was previously held by Congress. But if you think about how currency was printed in the United States, you would have to go back to pre-independence days. Benjamin Franklin's autobiography explains it beautifully. Like, he grew up in the Boston area, then he goes down to Philadelphia. Yeah. I mean, those days what would happen is, it was 15 or 16 when he ran away from home, because I think one of the last children to be born in the family, and his eldest brother ran a press, and he would have Benjamin Franklin work there, do a lot of work, but would not give him any credit. So Benjamin Franklin knew all about printing, and he decided to seek out his own fortune. So he goes from there. He has a few coins in his pocket. He goes from Boston. He's going by boats, landing at New York and then some other places. And finally he says, okay, I'm going to call Philadelphia my home. He comes into Philadelphia and then he's hungry. He wants to buy some bread. What happens is, in Boston, one coin got one loaf of bread. But the same coin, when he used in Philadelphia, he gets like 6 loaves of bread. Each one is about 2.5 feet long. 2.5 feet long. Even today, if you go to buy bread in United States, like for example, if you go to a sandwich shop, right, Subways or Togos and things like that, you will see that big loaf of bread, and then they'll cut it and then make you sandwich. So he didn't expect that one coin would get him 6 loaves of bread. So here he is trying to balance his bags on his shoulder, plus 6 loaves of bread, and making a comical figure. And a girl looks at him and laughs at him, and then she takes pity on him and says, okay, come meet my father, we may have some boarding room to stay. And then of course they get married and live happily ever after, but that's a story for a different day. What happened was, because he knew printing, he decided that coins were going to be only limited, and that the 13 states, that time there was no complete United States, these are 13 states, these states wanted to start using paper currency. And Benjamin Franklin was the first one who designed an effective paper currency system. It was very durable and it was very reliable, and even though each state could print its own currency, the way the thing was designed what made it very, very difficult to counterfeit that. And there are lots of interesting stories about how a printing machine, because by the time Britain had invented the printing press, and they made sure that not one press left its shores for United States, and he did some tricks to get one for himself, and then that started the paper currency. But paper currency was considered to have been first discovered and used in United States. So that's as far as paper currency is concerned. That's why I said that many states were having their own currencies and so on. But then as the country became one, a lot of things got centralized. Money creation shifted from a public utility to a private profit system because of the Federal Act, with the Fed creating money as interest-bearing debt and the interest flowing to member banks with historic Rockefeller and Rothschild ties. That means no matter which bank made money, these two always got their cut. The US effectively began paying a permanent interest tribute on every dollar created since 1914. And this holds true even today. If you think of deep state, these two R's are considered two of the pillars of this deep state. And now you can see how their control is being pulled out and they don't like it. But look at the amount of influence they have managed to gather over the decades, or in fact even centuries. So If you take a look at the debt and decline of the United States over a period of 100 years, everything becomes clear. In 1913, the US national debt was about $1 billion and the dollar was gold back. It was gold back until 1971. In 2025, the debt exceeds now 38 trillion and the dollar has lost over 97% of its purchasing power. This long-term inflation represents a hidden tax, transferring wealth from savers, that is you and I, taxpayers, to creditors, the banks, which are still being shadow owned by the two R's, and they are continuing to make money. That's why when the great financial crisis happened in 2008, they had winners and losers. Those banks which had the backing of these R's were all saved. By who? The Federal Reserve. To make that thing. The Federal Reserve's expansionary and contractionary cycles have repeatedly led to booms and busts, each consolidating financial control in fewer hands. So let's go back to again this 100-year period, right? So historical evidence of crisis and consolidation. This has been happening again and again and again and again. This time what is happening, I'll come to at the end of this monologue. It's a little bit long, but you need to listen to it because it gets interesting and it's very relevant for present day monetary situation. In the 1920s, easy credit and speculation led to the Great Depression. Major banks acquired distressed assets cheaply. Banks became more powerful. In the 1980s, the savings and loan crisis saw taxpayer bailouts of reckless institutions. In the 2000s, the dot-com and the 2008 crashes again enriched large banks via quantitative easing and asset inflation. What was quantitative easing? Quantitative easing was money printing. Asset inflation. What is asset inflation? The thing is worth in the market so much, but on the books you say it's worth so much. And this is true even today. Even today this is true. Every time such a boom-bust cycle happened, it deepened the dependency of the government and the economy on central bank liquidity. So this is as far as the bank, which is what we are all seeing. But if you take a look at the broader agenda, the social and political influence, you can see clearly that foundations like the Rockefeller Foundation, they have extended into education, medicine and foreign policy and are shaping social narratives and global institutions. The Rothschild banking networks maintain dominance in commodity markets, international gold trading and European central banks. By the way, it is believed that one of these two R's is the sugar daddy of Barack Obama. Just imagine, guys, this guy became a president during his first term as senator. First term. I just can't believe how that a person could catapult so fast to the top job. Through philanthropy and policy influence, both dynasties ensured systemic protection for private banking interests worldwide. The result is financial capitalism intertwined with governance, a system where debt perpetuates elite power. Constitutional and sovereignty concerns. Every once in a while you will get this thing, but look at how they manage this so well. The US Constitution, written in, I think, some bits between 1776 and 1789, it was still like, they were trying to get complete power, but I think 1789 is when Washington became president. I'm not 100% sure about it. It could be 1792. It's something like that, okay? The US Constitution, Article 1, Section 8, grants Congress the power to coin money and regulate the value thereof. The Federal Reserve Act effectively outsourced this sovereign power to private interests. Critics argue this violates the principle of monetary sovereignty, making the US government borrow its own currency from private lenders. Read Federal Reserve. The founding fathers, including Jefferson and Jackson, warned against central banking tyranny, warnings largely ignored in 1913. Actually, there's a story there. There are a series of letters between Jefferson, he was a US president, Jefferson, one of the founding fathers, and Alexander Hamilton. Hamilton wanted a centralized bank, Jefferson did not. They went back and forth, back and forth, back and forth. This was during the first term of Washington's presidency, and finally Washington sided with Alexander Hamilton and decided to go with a central bank. This was for the small states, 13 states or so on and so forth. Now, get back to the 1970s. The modern reckoning is fiat currency and global control. The end of the gold standard in 1971 severed all tangible limits on money creation. There was no backing of gold required, which was what United States had promised in the Bretton Woods Agreement in 1944, was now gone. The Federal Reserve now issues currency backed only by debt, enabling perpetual expansion of credit and inflation. Oh, and there is this little matter of raising the debt ceiling every time it crosses that, like recently that you had the government shutdown. Global institutions like the International Monetary Fund, World Bank, and the Bank of International Settlements operate within the same structure, ensuring continuing Western financial hegemony. So BRICS Bank, whenever it's formed, or BRICS currency, whenever it's formed, will be outside of this. And on this particular issue, Donald Trump, even though I don't consider him as a deep state person, he also aligns with them, but that's because of the larger interest of what would happen if the dollar ceases to be the reserve currency. It may not happen tomorrow, it may not happen in 30 years, but it is happening at some point in future. The owners of the system, major banks and institutional shareholders, benefit from compound interest on national debts worldwide. Now, what is happening is many economists and constitutionalists are asking to ban or abolish the Federal Reserve, or at least nationalize it, restoring Congress's authority over currency issuance and replacing fiat money with sound money such as either gold or silver or decentralized digital asset. And I think the Trump administration is going towards this, but they have still not nationalized the Federal Reserve. That means today, as we record this thing, Federal Reserve is a private entity answerable to nobody. The goal is to end the silent wealth transfer from citizens to private banking dynasties via inflation and debt. Until such reform occurs, critics argue, the US remains financially tethered to the same elite networks that designed the system over a century ago. I hope you understood where the whole banking system, the financial system, rests today. Some powerful banks that call the shots, and some families who are in the shadows. They have an unimaginable amount of wealth and they are calling the shots. Now you understand why it is so difficult to stand up to the deep state. But somebody is, and somebody is winning. Thanks for watching. Please like, share and subscribe to our channel. Don't forget to click on the bell button for notifications. Namaskar.